Hello everyone, welcome to Atomic ACCA's Pre Mock Exam Solving Series, and in this video we're going to look at question 2 of the March 2025 SBR exam. The company's name is Refer Company, so we'll just go to the requirements quickly and see what is there. Using Exhibit 1, discuss the ethical issues raised by Mr. Chan's profit maximization target. That's for 10 marks, and we have professional marks awarded for quality of this discussion and implications for Refer Company. So there's two parts to hit. You have to talk about Mr. Chan, what are the ethical issue, and you have to talk about the implication as well. So connecting both parts of this question, equally giving importance to it, will give you sufficient amount of that professional marks. So the whole part is 12 marks, and this is a common thing that we see in the question 2 of SBR exam, which is related to ethical issues. And the other question, the sub requirement generally is around some accounting problem. Now, using Exhibit 2 and in accordance with IFRS standard, explain how the sale of medicines to foreign government. Sale means probably it's IFRS 15 topic, including the outstanding receivable, should be accounted for in the financial statement for year ended 31st December X7. And that's for 8 marks. Explain how the sale should be recorded. So part 1 is related to sale, including the outstanding receivable. So a specific discussion about receivable is also required. So roughly we can say that 4 marks we're going to split for the medicine part, the sale part, 4 marks for the receivable part. So just a rough split, just to understand that we have to hit two parts in the question. But anyways, we'll just go one by one. We'll read the requirements and mean the case study and see what to do. Just like always, we're going to copy our requirement, take it to the word processor so that we don't have to take our requirement screen anymore. So we have part A of the question and we have part B. We'll just bold it up to understand that we have questions here. So this is the overall idea. Just to keep in mind, generally we're always doing our ethics question by keeping reference to three things. Number one, we go with the POPIC, which is basically the guidelines, the code of ethics, conduct, professional behavior, objectivity, professional competence, integrity, confidentiality. We look at the ethical threat, that is FISA, familiarity threat, intimidation threat, self-review threat, self-interest threat, advocacy threat. And finally, we be case study specific as well. That is, if something specific in the case study is there, we have to apply that, utilize that, bring up the points into a case study. Now, it's not that all of the POPIC or FISA points are going to come up in your answer, but that is like a reference point. Something or the other we can get out of it, and then we can build points out of this. How the mark allocation is, there is 12 marks to score in this. 2 marks is just like a bonus mark in this. So we don't have to really focus, but keep in mind you are writing for 12 marks so that you have enough content in your answers. So 12 marks altogether means roughly I need maybe 5 to 7 clear points, like 5 to 7 paragraph worth of points. Each paragraph having at least 2 to 3 sentences, and that is going to give me my 12 marks. Now, I'm focusing for 12 marks so that I don't run short on my points. But exactly to be precise, I just have to write for 10 marks because the 2 marks is bonus asset. So this is how our mindset is going to be while writing this particular question. So let's start reading the case study and see what all information is there. Exhibit 1. All right. Refer company is, oh, what is given in the introduction over here? Refer Company is a health and pharmaceutical company which prepares financial statements using IFRS accounting standard. The financial year end is 31st December X7. Following exhibit on the left side is profit maximization about ethical issue and medicine sale. Okay, anyways, useless. No problem. Profit maximization. Start. Refer Company is a health and pharmaceutical company which enjoys significant brand recognition and trust. So it's a big company. A new finance director, Mr. Chan, an ACCA member, has been appointed and his target is maximizing profit. All right. Production director, Miss Finch, has told the board that there is a safety issue with the security seal on one of the medicine that Refer Company is selling. The cost of recalling the medicine would be 1 million. That is, to take it back from the customer, it would be 1 million. Ms. Finch has planned to recall the medicine, but finance director Mr. Chan has blocked the plan as he feels that it will affect the share price of the company, because when you're selling goods and the company is taking it back from the customer returning the goods is separate thing. You are recalling the good means that goods are defective, That means there will be a negative public image, negative brand value will be there, and that will cause the share price to drop. So that is the point they are mentioning here. Mr. Chan's view is that there is very low risk to the public, meaning if that security seal, if some damage is there, there is not much of a risk to the public. That is what Mr. Chan is saying. Mr. Chan suggested to the board that if they wish to recall the medicine, then they should buy it back using third parties in order to hide the issue and protect the company's reputation. Meaning, let's say I am Mr. Chan, meaning I am refer company. I sell it to my customer. So instead of me directly recalling it from my customer, I am asking some third party, which is basically like my agent. I'll ask them buy it from the customer, like pharmacies and all. So pharmacy will sell it. So from pharmacy point of view, it's like, okay, the goods have gone to some customer, sales have happened, no problem is there. But in reality, it is not a customer that is purchasing it. It is my agent who is purchasing it from them, and that will reach back to me. So what happens? These pharmacies or the public will not get to know like this one issue is there with that product, and I'm trying to hide it by doing this manipulation. This is the overall scenario with that second paragraph. Third paragraph. Mr. Chan has also instigated a cost cutting program which will affect several medicines which are due to enter the market over the next few years. Instigated a cost cutting program. Okay, and it is going to affect several medicine which is going to enter. Probably if they are trying to do cost cutting on medicines, it could be based on maybe packaging, it could be based on the quality of the medicine. So some of the other problem is there. If they're doing some cost cutting means it's going to damage the public. Mr. Chan receives a bonus of 1% of the net profit. So whatever they're doing over here, you can see the situation that they're trying to hit the share price, keep the share price high, keep the profit prices high, try maximizing the profit. Everything they're doing from the short term point of view in order to get that bonus. So Mr. Chan over here is doing everything for self interest and focusing on the short term benefits. All right. Mr. Chan has decided that rather than investing in the research and development of new medicine, which may never be approved, refer company should acquire companies currently holding medicine patent. The principle behind this move is having bought these company, refer company would have hold the patents and raise the prices of the medicine significantly, because when you have patents over medicines, automatically there are no more competitors, you become the monopoly in the market, so you can price whatever you want. So that is their intention. When you price high, revenue will be high. Medicine is a necessity in the end, so anyways people have to buy this, so you will get lot of revenue. More revenue is equal to more profit, more profit is equal to more bonus for Mr. Chan. Again, self interest. Then okay, refer company would overcharge for its medicine in order to increase the profit. So that already was told in the previous point. By manipulating market prices, Mr. Chan hopes that refer company may grow significantly as there is limited competition in the pharmaceutical industry because of strict regulation, which means you will turn out to be a monopoly in the market. This is the overall scenario. Now, what we can do is, first paragraph is about an introduction. So we can put an introduction in our answer as well just to get a pace of the answer. Then we will go line by line, meaning paragraph wise, we will go pick out the information and start writing it. So this is how our structure is going to be. We'll take the word processor. We're doing the first answer. We'll just keep to the side because we have to often refer to this. All right. So we have our answers over here. And we have our word processor over here. Okay. First, we'll just write the case study in brief. What is the situation? The refer company involves in selling medicines within the pharmaceutical industry. Miss Finch is the production was it production director. Okay, Miss Finch is the production director, and Mr. Chan the finance director, who is involved in many unethical business practices for various reasons. We just gave a basic idea about who is Miss Finch in the story, who is Mr. Chan. He's the finance director, and he is the one involved in a lot of unethical business. What is refer company? They are involved in selling medicine. They are in the pharmaceutical industry. Just gave a basic introduction just to pace up our answer so that there is a proper structure over there. That's it. It's not a very important information. No actual marks also would be gained for that point. So that is only for pacing up. Now let's go paragraph wise one by one. The key issue, what was the first paragraph last line? There is a target for maximizing profit. The key issue for all unethical activities arise due to the target provided for finance director, which is based on maximizing profit. This causes a lot of situations where finance or Mr. Chan has to behave in a way where he focuses only on self interest or self interest benefits and short term focused. So one point we made over there. Next, we start between paragraph. That was one point we got from the initial paragraph only, that the introduction paragraph. Now let's get point from that production director point of view about recalling the goods. First line they're telling that there is some recalling that is supposed to happen, some product sealing issue is there. Now whatever sealing issue is there, that is related to the packaging department, fine. Miss Finch is asking to recall this, good thing. But Mr. Chan is coming and blocking this due to different reason. So this is the ethical issues that is coming up. We have to tell the ethical issue, and the second point for professional mark, we have to connect it and tell what is the implication for the refer company as well. So two parts are always needed. Let's start with the situation. Due to a sealing issue on sold medicines, Miss Finch wishes to recall the product, but Mr. Chan has blocked this for various reasons. We just gave a brief about what that situation is. Now we start telling the issues over here. Number one, Mr. Chan has asked not to recall the product in order to save the share price and market reputation of the company. This is what he does. But what is the ethical issue over here? He is not being straightforward in his business practices. He is trying to manipulate and want to improve the market image by doing things that he is not doing things what he is supposed to do. So acting according to his position, he is supposed to follow the legal requirement, because they told in the last that it's a pharmaceutical sector, regulations are very strict. That means if some damage is there on medicines, you are supposed to call it back. So you're not being straightforward in your business practices, you're not following the rules properly. So professional behavior is gone, integrity is gone. So two things you can say over here, and that is what we'll tell over here. So this shows a lack in professional behavior, as being in pharmaceutical industry where regulations are strict, they are supposed to follow the rules and recall products back. Now what could be the implication on the company because of this? This is professional behavior for Mr. Chan. What is the implication for company? If these products are not recalled, someday in future this might come into sight when any customers get affected because of this. What will happen because of that? In such in such instances, the regulatory penalties and reputational damage would turn out to be massive. So we told one main issue about professional behavior over here. Second, what other issue was brought up over here? We'll just make it into a smaller paragraph. That was about mainly professional behavior. We told the second point about integrity. Why integrity is not there? He is not being straightforward and trying to increase the market share. So, a connected point. Moreover, the above issue also also shows a lack in integrity from Mr. Chan's side, as he is trying to uplift the market share price by not doing things he is supposed to do. Hence, a fake image of the company's brand value is being promoted in the market. This is also a manipulation of the market, which in long term will not lead to a success for refer company. So we told integrity issues from Mr. Chan's point of view, and how is it going to hit the refer company. This will not lead to a long term success for them. So we told these 2 points. Next, why he could be doing this in order to point about keeping the share price up, reputational value, all that is okay. But another thing, an internal intention could be that if they have to recall, it's going to be a 1 million cost. So probably he doesn't want to recall this, and that is because he doesn't want to you want to save that $1 million. Saving an expense is equal to profits would be high. So there is again a short term benefit focus he's focusing over here. That also we can bring about a point as well. An internal intention for why Mr. Chan could be blocking the recall would be to save the $1 million cost for recall, as this can help boost profits. This shows that the Mr. Chan is focused only on short term self interest benefits to earn higher bonus by putting companies long term survival and reputation at stake. Moreover, okay, well, that could be enough. Okay, we'll say moreover, this block in recall would also, or we can make that another point. There was a point mentioned about low risk, stating that if the ceiling issue is not big of a problem and this poses low risk to the public, so he is taking the health and concern about the public very lightly and stating that we'll just save money right now, anyways it's not big of risk. So is not being, doesn't have that due care towards the stakeholders. That is one of the POPIC item: professional competence and due care. So he's not having due care towards his stakeholders, that is mainly the customers over here. So you can say that as a point over here. A reason for blocking this recall is mentioned by Mr. Chan as it is low risk for the public. Considering Finchco, not Finchco, what is the company's name? Referco. Considering Referco being in pharmaceutical industry selling medicines, any small risk could turn out to be extremely sensitive as this is a matter related to health. Hence, the profit focused mentality of Mr. Chan leads to a quality no leads to a situation where no due care is shown towards their main stakeholders, that is the customers. So we told what is the issue with the issue with Mr. Chan over here. He is not having due care towards customers. What could potentially this turn out to be an impact for the company long term? When we repeat certain points, it could turn out to be boring for the reader. So try making it a little different. If customers health gets damaged, what could potentially happen? They could sue cases. We didn't exactly tell about, we told about reputational damage, we told about legal penalties and all, but we didn't exactly use the situation where customers filing a case or some sue could happen and customers not buying your products anymore. So like this point we didn't mention anymore, so that we can make right now. So we can say that this would lead to dissatisfied customers not uh, coming to not purchasing refer course product in future, leading to loss of revenue. Moreover, significant health damages, if happened to customers, can lead to legal cases and penalties. So we told what is the issue with Mr. Chan and how is it going to be a problem for the company as well. So that point is also done. Then they told about connecting to the third party, using a third party to buy back the product rather than taking it back directly. So Mr. Chan suggests that if recalling, they should use a third party to recall these products to, what is it telling, to hide the issue and protect the company's reputation. To hide the issue and protect company's reputation. Though this might look like a strategic move, meaning they're trying to do a strategy where trying to recall the product through a third party person. If it's a one time thing, it is fine, but looking at the overall scenario, this wouldn't look like a one time thing. They would want this third party to do this over and over again. So Mr. Chan is not focused about clarifying the issue over here. He is more focused about not getting the reputation damaged. So again, he's being dishonest in his work. He's not having that straightforwardness. He's having that crooked mentality in order to get things done. So though this might look like a strategic move, Mr. Chan's strategic move, this is a crooked mentality shown by Mr. Chan, as he is focused on saving companies' reputation rather than actually solving the security seal solving the security seal issue or health of customers. Hence, in hence in short term, this may work out and save companies' reputation. On the long run, the damages would definitely be significant. All right. So we done with that first paragraph. Each line we got some point. We connected to some of the other points from that POPIC or the FISA part. So we've been connecting here and there one by one, and we have been building points on that. And you can see that now. Don't consider that these are big paragraphs or big answers we have written. That's because the page size is small. If you make it big, you can see that the answer is only 2 to 3 sentences in each paragraph. Right now, this is what we have done so far. Let's read the remaining two small paragraphs and see what points we had over there, and we can mention the points from there as well. There could be extra points that I'm writing in the answer over here as well. Don't keep that in mind. This is just to show that these are all the possible points you could make out of this. You must have written this answer from your end, so you can just connect and see what all points you have written is there over here. What all points that you didn't write, you are finding over here as well, and how we are framing the sentences. Now, next thing was about cost cutting program, and that is a one point only. That's one thing about that cost cutting situation. You can just write over here. The cost cutting initiative for medicines certainly would be around the quality of material used, or distribution, or packaging methods. In whichever case it might be, the damage might be the product being sold is a sensitive item, which is medicine. So if they're trying to cut the cost based on the overall scenario, they're not trying to cut cost in a right manner. They're probably going to cut cost in something that is not right, which is either quality or something. And they're not really bothered about that either, because they're focusing on profits over here. So cost cutting initiative, if done on a sensitive item, definitely not a right thing to do. So this is a wrong strategy or a wrong business move that they're taking in order to make profits. Long run, definitely not a good thing. But if we keep on mentioning this long run point, it's not going to help out. So, or it looks a little boring in our answer, so we need to build some other point. All over the answer is going to be same in the end. Everything is a reputational damage, everything is a legal problem, everything on the long run will turn out to be a problem, but we can try something else as well. So, or distribution or packaging method, in whichever case it might be, the product being sold is a sensitive item, which is medicine. Now, mr chan here is for Mr. Chan here is using unprofessional, I hope that is a word, I don't know, unprofessional business ideas in order to make profits only for the sake of short term benefits. So he is using unprofessional business ideas. So he's being unethical. So we focused on the point about what ideas he's using, not right. How is it going to hit the company over here? If cost reductions are made on medicines in a wrong way. Wrong way means, as mentioned above, we can just mention above. What could happen? We can just use different points over here. This can lead to refer company being kicked out from the market very soon, as customers would prefer choosing an alternative where quality of products are maintained, because it's medicine, so people are definitely going to spend money whatsoever it is in order to get quality product. It's not that they spend some money and clear the health halfway and keep the remaining on a risk factor. They want the things to get sorted out, which means people would definitely go with the people who are going to sell quality materials, and they're not going to compromise on that. So cutting cost on quality or other things in the wrong sense could definitely be a situation that could put the company out in the market very soon. Finally, moving to this last paragraph that is stating about acquiring company and being that monopoly in the market. So we can state that point as well. Company, no, Mr. Chan wishes to acquire companies within industry with patents rather than investing money into research. The main focus here is two things. Firstly, if research expenses are avoided, profits can be maximized. Secondly, acquiring companies with patents puts Referco in a monopoly situation in order to excessively price the customers and boost revenue. In both cases, the profit maximization targets can be achieved, but it is done through dishonest ways of conducting a business. First, about the research part. If no investment in research and development is done, how is this going to be a problem for the company? No upgrades or no improvement in the existing quality of medicines will happen. Secondly, what about the monopoly situation? Monopolistic pricing decisions taken by company will sooner or later be noted by the competition authorities. Competition authorities, as regulations in the industry are very strict. Hence, these acquisitions, even if turns out to be a success in the short term, due to market regulations, refer company would certainly be not able to cope up with all market conditions market conditions market conditions, leading to their downfall very soon. We can just connect that point about excessive pricing to having no due care for the customers as well. Once again, excessive pricing to loot from customers also shows a lack in due care from Mr. Chan's point of view. So finally, a conclusion you can give, that is, Mr. Chan, because all the paragraphs are done, so we have taken all possible points from that case study to build points. So if you look at the size, it's already understandable. We have written answer that's worth more than 12 marks over here. But whatever information you can build within the time frame, build that and make your answer. So Mr. Chan must conduct business in ethical manner. Though profit based targets can be given, company must make sure that these should not be based on short term profits, rather long term profits. Moreover, bonus should not simply be based on financial targets which can be manipulated through accounting policies. Rather, non financial targets and performance based bonus should be provided. Then, Mr. Chan must ensure that we told about business conducting things and all is right and all, but strategies taken should be considering the long term growth of the company and also considering the health and safety about the customers as well. So Mr. Chan must ensure that strategies taken for the strategies taken for the company is long term focused and considering the health and well-being of the customers without compromising on the quality of service being provided. So that should be enough. We have written well enough points for more than 12 marks. So hope you have followed on the structure of how we created an answer for this particular question on ethics. Just to give a brief summary, the strategies will be you focus on these three things. Now we can erase this off. We focus on these three things, read the case study, get an understanding, then build points one by one when we are reading the paragraph. So each line you can get an idea, you can start building on that, and once you see that you have enough points, quickly move on to the conclusion. Try this when you're doing the exam and let us know how this has helped you in creating your answer for the ethics question. Let's move to requirement number B, which is related to accounting issue. That is for 8 marks. And as I said earlier, we have to talk about the sale of medicine roughly for 4 marks, and we have to talk about receivables roughly for 4 marks. Now that 4 and 4 split is not accurate. We have to see what is the case study and what information is included in that, and we know that this is an accounting issue, so we have to talk about the technical part from from our knowledge. That is going to give us mark. Connected to case study, that's going to give us mark. Second part with receivable, talk about the technical part, that will give us mark. Then talk about the case study, that's going to give us mark. So if we split it across that way, we can see that the rough split will be 2 marks for technical, 2 marks for case study, 4 marks. 2 marks for technical, 2 marks for case study, 4 marks. Like this we can score our 8 marks. So before proceeding with the case study or understanding the information, it is crucial that you create a structure and a layout of what you have to write in the answers. With that being said, let's read the second exhibit and see what information is given within this. So the information given here is Referco sells medicines to a government in a different jurisdiction but has experienced significant delay in receiving payment. So chance of bad debt is there. Currently, it has outstanding receivable of 3 million with some of the amount being 4 years overdue. So that's like way overdue, probably a sure bad debt. However, if a company has continued to sell medicines to this government at its normal market price itself, the medicines are essential in fighting disease in that country. Okay. Then refer company attempted to renegotiate the repayment terms and stated that they would accept consideration below the contract price. That means they need a discount. By 31st December 2007, that is year end, no agreement had been reached both parties accept that refer company has an unconditional right to receive payment. So they have been selling it to the government. Revenue, I mean, the receivables are pending. Some of them are 4 years long, and it said that some of the amount being 4 years overdue, so some could be less than that as well. So 4 years is the maximum, some could be less than that. Customer has an intention to pay. They have some repayment terms. Negotiations are going on. They need a concession, so they would like to clear the payments. And the government is agreeing to the fact that refer company is having an unconditional right to receive payment as well. So from refer company's point of view, they can record a receivable and everything, but there are chances of some bad debt as well. So this is the concern we have over here. So first, again going back to the structure, first part is related to sale of medicine to foreign government, how this should be accounted for. Now, first of all, here the issue is not about the amount or anything in the beginning. First place is the receivables are overdue for a long period of time. And if you look at the 5 step transaction, there is a part which says that only if you're sure that you're going to get money from that other party, you can book a revenue and a receivable for that, meaning debit receivable, credit revenue. If you're sure that you're not going to get any money, then you cannot book it. It's same like, giving money to certain friends of us or some family of us. We'll give money, but we're sure that from the beginning itself we'll not get it back. So this is the same situation over here. We are selling products to the government, but there is no clear cut idea whether we're going to get it back or not. So in that case, should I record a revenue or not? This is the scenario over here. So first, we can talk about the sale of medicine. So that will be first part. Let's talk about the technical part connecting it to that contract thing. As per IFRS 15, the first step to recognize revenue is to determine whether a contract exists or not. A contract exists if following conditions are met. What are the conditions? Number one, the contract is agreed by both parties, which means it's not forced upon anyone. It is a agreed thing by both person. Number two, both parties are aware of the rights, aware of their rights and obligations within the contract. Number three, both parties, there is existence of a commercial substance within the contract. 4, there is there is a structured, or there is a proper payment plan and both parties agree to this. Finally, there is a assurance from selling entities point of view that payments can be collected, from the buyer. So there is a probable situation that you can get money from the other party. Now here contract is agreed by both parties. They're aware of their rights and obligation. A commercial substance is there, medicines are being sold. Proper payment plan is being negotiated. That means some plan was existing, now some renegotiation is going on. So plan was there. The only problem right now is about whether they'll get the money or not. Now that was technical part. Now let's connect it to the case study. In case of sale from refer company to government, all first 4 conditions are satisfied, but the last one is at a doubtful situation. Currently, there are receivables, some of which are more than 4 years overdue, which is extremely over the limit of any normal company's receivable or company's credit period. That means way beyond the limit. Now, considering this fact, any further sales, if to be recorded as a revenue, should have clear indications that probable receipt of money from, not about the payments before this but payments after this, okay, probable chance of collecting money. So should have clear indication that probable receipt of money from customer is possible. Now what is the situation over here? Here it is stating that some renegotiation is going on. Customer is agreeing to the fact that some payment is to be made, and they're okay to pay the amount if in case, a discount is allowed for them. So in that case, if all these conditions are accepted, then they can book a revenue because the customer has an intention to pay. So you can say that over here, customer has an intention to pay as they agree to the fact that there was a point over here. Refer co has an unconditional right to receive payment. The refer co has an unconditional right to receive payment and is willing to accept the offer if a discount is provided. Hence, from refer company's point of view, they can book a revenue, but not the but at a discounted price. Why discounted price? Reasons are two. Reason for discounting is two. One, as few as past payment schedule indicates that payments don't get cleared, as past payment schedule indicates that payments don't get cleared soon. This shows a work being done now and payments made in future. In such scenarios where time value of money is significant, present, or we can say that discounted figure of total revenue only should be considered. Secondly, another situation about the revenue recognition or why the full amount should not be recorded is past payment plan suggests that receivable figures have been like very big. Plus, they are asking for a discount as well, which means if refer company is planning to sell an item worth $100 and they're very sure that they're not going to get $100, but they're somewhere sure that they might after discount maybe they'll get $70 out of this. In such a case, whatever after the discount they are very sure to get, record only that amount, that $70 within the revenue part. The remaining part is maybe not situation. So you have to record it only when there is a probable condition or where there is a clear positive indicator that you are going to get that money. So it's like a variable consideration situation. When will you record a variable consideration? Only when the uncertainties are clear and there will be no situation where you will have to reverse that figures anymore. So that concept we can apply over here. So we can say that as past payment schedules indicate high receivables overdue and customer asking for a discount, what is the company's name? Yeah, refer company must only record must only record for revenue they are sure to get. The remaining amount is to be considered by application of variable consideration rules, which IFRS 15 states that. So now we told about the case study, so we're slightly referring to the technical part as well. By application of variable consideration rules, which IFRS 15 states that it can be recorded within revenue only if probable situations indicate that a reversal will not happen in future, which means a chance of non-payment of that variable amount will not happen in future. So we told about the sale of medicine part and what all to be recorded over there. So the structure is like this. We told about the contract part and whether it can be a revenue or not. Then we connected to the case study of telling why it can be considered as a contract existence, because they have a intention to pay. So that contract part is clear. The second thing we told about in this discussion was how much to record. We told that full amount cannot be recorded, only discounted figure is to be recorded. We connected the case study part by telling about the future payments and discounting part and all. So technical part was also mentioned about time value of money and recording the discount factors, so that we connected to the case study. Secondly, we told about the variable consideration part. There also we told about the technical part and connected to the case study. So initial part of the discussion was technical part, case study, but towards the end we just made a swap in this. We told the case study, then connected to the technical part. Either ways it is fine, but the only point you have to always be careful is whatever answer or discussions that you're putting forward, this should be backed up by some technical part that you are taking from the accounting standards. You should not bluff some random information in your answers. So that will be part one of an answer. Second one is quite simpler version, the receivables. So initially, though we told that it's a 4 mark split, based on the size of our answer and based on the contents that are involved, we can pretty much say that it's not a 4 mark split. Sale of medicine has pretty much more contents to talk about. Maybe we'll get 5 marks over there, and 3 marks could be for the remaining topic. So whatever it is, we have made a structure anyways. That mark splitting was not exactly to find out how much to write, rather it was just to understand that okay, these are the areas we have to hit in the answer. So first part is done. Let's talk about the receivables part. What is there in the case study given? Receivables are overdue since long time. So now the question over here is, should that remain as a receivable within the financial asset, meaning within the current asset part, or should it be removed and considered as a bad debt? So this is the overall scenario. Now receivables are financial assets for a company, as there is a contractual right to receive cash from another party. So it's a financial asset, which means we can apply the IFRS 9 rules. As per IFRS 9 rules, for a receivable, when repayments are generally more than 30 days overdue, it is considered to be having a loss allowance to be created, which is equal to the expected credit loss. This simplification is allowed under IFRS 9 specifically for receivables. So what does that whole statement mean? It simply means that you don't have to figure out what is the present value of figures not able to get and the cash flows and all. Just like how we talk about a financial investment within debt investments, that is held at amortized cost or FEOCI. Rather, when it's a receivable, whatever figures that you think that you will not be getting it, just record a bad debt directly and no need to get into a lot of complication. This is what that statement means. So we took the technical part, wrote over there, which is as per IFRS 9, what is to be done with the receivables and how is the loss allowance and all to be recorded. Now connecting to the case study. Currently, the receivables are overdue, some of which beyond 4 years. Moreover, for further continuation of contract, government is asking for price concessions. Both of these are indicators suggesting that repayment of the whole amount probably would not be happening and only partial recovery of the receivables would be possible. In such instances, company must create an company must create a loss allowance like a provision for the expected amount not probable to receive. This figure shall be reduced from the gross receivables amount shown in SOFP and only the net amount shall be thereon showed. So what does that second paragraph mean? It simply means that whatever money that the company is expecting not to get from the customer, you need to create an allowance for this, meaning an expected credit loss. And that's a lifetime thing, which means you're basically recording like a bad debt itself. And what you have to do, whatever figures that you're expecting not to get, that amount you have to remove it from your receivables figure. So gross amount, let's say it's $3 million, and let's say you're not expecting to get $1 million. So that $1 million you have to remove it from that 3 million figure. So gross amount is 3 million. You remove 1 million and the net figure, that is 3 minus 1, 2 million should be shown in SOFP. So you can just make an entry over here stating that a debit expense credit receivable shall be passed. So that will be the answer for our last part of this question, which asked about how to account for receivables. So that was quite straightforward. You just had to talk about a little on the technical part and a little about the case study bit. Main content over here is related to receivables being, credit impaired or receivables having a loss allowance over there. So we connected IFRS 9 in order to answer that question. Hope you have followed with the structure that we applied for this question and the techniques and the application of how to answer a question 2 model of your SBR exam. Hope this was helpful to you. See you in the next video. Bye bye.